Stocks had their worst showing in 7 years today on Wall Street.
We don't know how much forced selling or panic selling there is ahead.
Lehman Brothers is now bankrupt.
The Dow Jones Industrial Average today down more than 500 points.
Wall Street's been able to get away with this obfuscation of what's actually going on. There's no opacity to it. Having consumed a lot of research on Wall Street, or paid for a lot of research, I said to myself, why don't I create the research that people really want? My basic premise was people really want the truth.
Keith McCullough came in my office one day and just laid out this idea he had for a new company.
We agreed to meet for maybe about a week or two and try and map out what this business could look like.
I saw what was coming down the pike. We're talking 2007. I knew where comp was headed. I knew where layoffs were headed.
There was a meltdown in credit markets and the asset-backed securities markets, and as everybody knows, in the housing markets.
It was something that was so endemic to a situation that was just headed down on I guess, more of a secular basis.
Wall Street firms historically spend a lot of money when they're making a lot of money, and they cut back when markets are bad.
It was really a decade of excess and hubris. So I think we had, at the right time, the right inclination and instincts to do something that was really lacking.
Old Wall Street has three big components. They have a broker-dealer or brokerage unit, they have an investment banking unit, and they have asset management units. If I'm writing research about a company that I also have as a banking client, then I am predisposed to write positive research about that company.
And that still exists, right? I mean, even in 2008 and 2001 and 87, that relationship is there with the conflict of interest that traditional investment banks have.
That's why 90% of Wall Street's ratings on a stock are buy.
Initially, it was a really small group, an office in New Haven and added primarily consumer sector research.
Remember our morning meetings, it was 3 or 4 analysts sitting around a table, just talking shop, talking about what we thought about the overall market, what we thought about our individual stocks. And Keith would overlay the macro, and that would really give us a good basis for what we wanted to talk about with our clients that day.
What was happening was that there wasn't a lot of trust on Wall Street, and what people really needed, I think, was a voice that was, sort of stood out from the crowd, was willing to be negative, was willing to kind of call things for what they were, and that's really what we did from the outset.
We knew that if we had the right platform and no conflicts of interest, that if we started to make big calls, people would have to pay attention.
It all been on the buy side, so we felt like we knew how to create a better mousetrap, if you will.
We wanted to have the world's best content at the highest level. So in other words, when I meet with one of the world's best investors, I can go toe-to-toe with them with our investment point of view, and then if I express that to the masses, I've already validated it at the highest end. We call it democratizing research for the many.
October of 2013, when we moved into the office here in Stamford, we designed this office very much with a Silicon Valley feel to it.
Built this beautiful place that was very much built on our principles. There's no walls that you can't see through. If you were at our place, you could see it's all glass. It's ultra transparent.
It was also the launch of Hedgeye TV at that point in time, because now we have the TV studio.
If I thought Old Wall Street research was bad, Old Wall media was worse, because they're basically using all Old Wall research as their content. Spent a fair amount of capital and took a lot of time to build what we thought was a very groundbreaking video component to our product.
Big sort of strategic move we made is to get into Washington policy research with the acquisition of Potomac Research Group.
It's increasingly important that the investor community be able to both understand what was happening in Washington and predict the impact of Washington activity on their portfolios. It's hard to do fundamental research and not think about the Washington regulatory and legislative, even judicial impact on those companies and industries.
To consistently add that overlay and that very big picture and very long-term view is going to make a real difference to our client base, both at the institutional level and at the retail level.
Looking forward, I've never been more excited than I am today.